Okay, good evening. Once again, I've come back to your screens. I've come back to your study table, wherever you are. Good evening. It's 10:50 exactly on the dot. Today, 25th June 2022. We are going to have another edition of an online class. We just finished the face-to-face section at the CBS behind the Ghana School of Law in Makola between the hours of 3:15 to I think 6:30 today. We were done with the concluding part of the Public Expenditure and Financial Accountability Framework. The last time we looked at the introduction and then we went a little bit deeper. Today, we looked at the benefits of a PEFA report. We continued, so we were able to look at 3 practical examples, which are all in the course manual. We plan of looking at a more comprehensive and difficult question, an ICAG examinable question next week. Then now what we are going to do, like I said in my previous video, which I did on the 18th of June, exactly a week ago, is that now we are going to have the theory sections here online. So when we meet face to face at the CBS in Makola, then we look at exams type questions, practical questions. Now we have 4 weeks to the exams. Today is the last Saturday in June. Means we have approximately 4 more Saturdays to the exams. So next week when we meet, we are going to look at calculation from previous topics we have treated. Yes, how the questions are set. But from now onwards, is going to be theory for the online section. So basically, or let me say, we are done with PEFA. We'll take 1 more comprehensive question and solve in class. Then tonight, for about the next 1 hour, 30 minutes or so, we are going to look at a different topic. But before then, let's look at some of the things we look at today at the CBS. We look at the benefits of the PEFA report. Don't forget, we said PEFA comes in the form of reports with corresponding scores for the various pillars and their performance indicators or dimensions. And we were able to say that PEFA helps government to obtain a snapshot of their own PFM performance. That is public financial management performance. So we look at PEFA as like assessing the strength and weakness of the internal control system of a public financial management system. So how weak or strong are the internal controls or the financial management processes of the public sector. So when there's a PEFA report, this gives a snapshot of public financial management performance. Then we also said PEFA offers a common basis for examining PFM performance across national and subnational government. It means based on a PEFA report, performance between national government, subnational government can be performed. Look at where maybe the public financial management system of Ghana can be compared with that of the UK, the US, or subnational. Okay. Then the third benefit of the PEFA report we look at was that It allows both governments and other users of information to gain a quick overview of the strength and weakness of a country's PFM system. Yes, public financial management system. How strong are they? How are people following procedure? Public financial management systems and procedure. How are they doing that? That is a question or something that if there's a framework called PEFA will help to assess. Then we move on to components of internal control system in relation to the PEFA framework. Yes, we look at this today. Components of internal control system in relation to PEFA framework. We are saying that when a public financial management system will work, will depend on certain variables or components. For example, the control environment. The control environment has to do with the thinking ability, the integrity of management or employees. How do they perceive internal control or public financial management system? If you are in an environment and your head or the department adhere to strict measures of professionalism and integrity, then it means public financial management system are assessed to be stronger. You see, so we look at the control environment as the first component of internal control system in relation to the PEFA framework. Here, we said that the control, we will try to define the control environment as standards, process, and structures that provide the basis for carrying out an internal control across an organization. Yes, so a consideration of this control focuses on one, the personal and professional integrity and ethical values of management. How professional are management? How well do they adhere to ethical standards? This will influence the control environment of wherever they find themselves or they work. Then look at commitment to competence. Commitment to competence. Don't forget one of the IFA code of ethics or the ICAG code of ethics is what? Professional competence and due care. So if people adhere to strict level of competence, whereby they only perform work for which they have the competence, since that they don't have the competence, the skill to do, they do not perform. That means PFM systems are assessed to be stronger. And so we look at management philosophy and operating style. Yes. If your manager or your boss or the CEO or management of the entity or the sector, what is their management philosophy? Do they believe in overriding internal controls, or they believe in adhering to strict systems of internal control and way of doing things? These are components of internal control system in relation to the PEFA. So then we look at risk assessment as the next components of internal control system in relation to the PEFA framework. Now, with risk assessment, we are saying that management requires to consider the impact of possible changes in the internal and external environments and potentially manage the impact. Yes, when you are doing a business or you are in an office or you are in a business venture, you don't do the business for business sake, but then you try to assess risks of internal and external aspects that can impact your business. If you are doing business and you are paying in dollars, you have external or dollar vendors or euro vendors outside. That means you are at risk of being exposed to what? Exchange fluctuations and kind of stuff. The currency, CD dollar, CD euro, pounds may go against you. So this is a risk. What are some of the things you can do to minimize this risk? Can you hedge? Can you enter into forward contract options and those kind of stuff? How do you hedge? So risk assessment is also a component of the PEFA framework or components of internal control system in relation to PEFA framework. How do we do risk assessment? One, we identify the risks. So like I said, what risks are we exposed to? Currency risk, exchange fluctuations. This is something we have identified. Then under risk assessment, after we have identified it, we do what? Risk assessment, that is significance and likelihood. So now we have realized that our risk is currency risks or exchange rate fluctuations. We have identified it. What can we do? That is risk assessment. We are going to assess what are the possible options existing for us. And we consider doing so many things. Must we hedge? If we must hedge, how do we do the hedge? Do we enter into options, futures, or forward contracts, or what? Do we adopt to leading and lagging for our receivables or our payables? If you're in the business of doing dealing with items that are very, very volatile to changes in currency or changes to consumer taste and preference. Example, if you are dealing in petrol, what are some of the risks? What are your business risks? What are your financial risks? What are the risks you are exposed to? Now, to identify it, what are the options available for you? The third one on risk assessments is risk evaluation. Now, you have so many options. So you evaluate them. Which one is going to work best for you? You evaluate the various options available. Then risk appetite assessment. Based on the evaluation, you choose what you prefer. You can do so many things. You can decide to transfer the risk by taking on insurance. Some risks are non-transferable, so you just accept those risks. Depending whether you are a risk taker or a risk averse. Is that all right? Okay. Then last point on our risk assessment is that you respond to the risk, either transfer, you tolerate, treat, or you terminate. Yes. The third component of internal control system in relation to the PEFA is control activities. The control activities are those activities that you can put in place to mitigate losses or increase internal control. Is that all right? So control activities are actions that help management mitigate risk in order to ensure the achievement of what objectives. One key control activity you can think of is segregation of duties. One person do not do anything from request to authorization, approval, payment. He does bank deposit, collect the cash, everything. One person doing the whole thing will lead to fraud. Internal controls can always be broken. Systems and procedures can always be overridden, and things are not going to go all right. Okay. Another control activity is authorization and approval procedures. Don't forget, you may be asked this in the exams. Yes. So, for example, the components of internal control system in relation to the PEFA framework. For a question like this, they will try to give you a preamble and why, but all what they want to say or what the examiner wants to hear from you is the components of internal control system that relate to the PEFA framework. This is trying to tell them about the control environment, risk assessment, control activity. Even control activity on its own could even be a question on its own. Those of you who are doing auditing and assurance or who will be doing advanced auditing, you'll be seeing some of these things, control activities, segregation of duties, approval and authorization procedures, control of access to resources and records. Yes, there are some access to records. Not everybody must have access to them. Even if you have access, you have to go through a system of what? Authorization and approval procedures, and then verification, physical verification of all things that are needed. For example, physical verification of motor vehicle, physical verification of inventory, and to show that yes, the number is saying this in our books, in our system. Physically are the things there. Physical verification. All right. Now reconciliation. Yes. One control activity is reconciliation. By reconciliation, it could be so many things: bank reconciliation, stock reconciliation, receivable reconciliation, payable reconciliation, petty cash reconciliation. So at any moment in time, our bank balance is agreeing with what? Our cash book balance at the bank side of our cash book. our customers' balances are reflecting what is reflecting in our system. So the customers will not always dispute that I have paid this and you say I haven't paid this and that kind of stuff. We also don't argue with our vendors. Whilst our vendors are saying we owe them so much, we're also saying we owe them so less. This is when vendor or payable reconciliations are done regularly, and so that everything will be reflecting a true and fair value. The another control activity is review of operating performance, review of operation process and activity, and the last one is what? Supervision. We look at information and communication. That's in an environment where information and communication does not flow proper. It means there's weakness in systems. We move on to monitoring as the last component of internal control in relation to the PEFA framework. All right. Then we look at PEFA performance indicators, general guidance on scoring, how to score. We look at all this in class. If a score is D, what does it mean? A score C, what does it mean? A score A, B, what does it mean? We look at all this in class, and today I really enjoyed today's class. It was very, very interesting. Trust me, the way the contribution you all contributed and participated with your views and ideas, then we all reached a consensus of today's class was very lively. Then we look at scoring where indicators are not particular or not used. Yes, these are things we have looked at already in class. I'm just brushing over everything. Then we look at materiality and significance and others. Okay. Now we look at PEFA methodology. This was where was of particular concern to me. PEFA methodology. Yes, PEFA methodology. So here we were looking at the scoring of indicators with multiple dimensions. Don't forget, we said that the PEFA last week lesson has 7 pillars. Now, these 7 pillars each have its what performance indicators with sub multiple dimensions. So how do we do the scoring? That was what we looked at. Then we said there are 2 main ways of doing the scoring. That is the weakest link method and then the average method. We defined all this, and I did mention and made it clear that it could form part of a question, or it's even a past question they've asked before, whereby students were asked to define the weakest link method and then the average method. We looked at that and it was understood by all. We solved example. Is that all right? When we say the weakest link method is used for multidimensional indicators where poor performance on one dimension is likely to undermine the impact of a good performance on other dimensions of the same indicator. Yes, this is where somebody cites an example in class. It's like one granule spoiling all the granules. So one dimension is doing well in a particular indicator, and other dimension is doing well, but one dimension that is not doing well will override and spoil everything. That's the weakest link method. Then we look at the average method, which is a direct offset and deviation from the weakest link method, which uses 4 cardinal indicators, okay, which uses 4 cardinal indicators, A, B, C, and then D, with all their score. A is score 4, B 3, C 2, and then D 1, in that order. Then we find the average. We saw all this in class. If you wish to join the calculation, the practical question, you are always welcome to Center for Business Studies at MAKOLA behind the law school. So you are looking for Mr. Albert, then you register, then you have a sound practical lesson, and then pass the exams once and for all. Then we want to look at the practical way to calculate and aggregate the aggregate score for an indicator. Yes, We solved example 1, we solved example 2, and I think even example 3, which was an ICAG question and adapted November 2021 PEFA framework. Don't forget, PEFA is one of the topics that the examiner is always keen on asking students in the exams. So take your PEFA very, very serious. Know all the 7 pillars, and know the methodology, weakest link, and then the average. They know how to use the interpretation of the score. If you do the calculation and a score is 2, what does it mean? 3.5 to 4, what does it mean? We have score A, score B, B plus, C, C plus, D, D plus. There are some technicalities there, especially if you are using the weakest link method. So try and know all this, because they don't want to try test you after your calculation. Then you tell them the score. Then you explain what does it mean. Don't forget, a score C is that the indicator or the measurements meet the minimum level of what requirements. But a score D is no good at all. We look at all this in class, and it should be all okay. So we look at example 1, 2, 3, and I have with me practice question, which you may decide to also look at. So I'll be sharing that one with you very shortly, so that we all read and look at that question and know how we have gone by the question. So I'm sharing a screen pretty shortly. You all see the screen I'm sharing. Just a minute. No. Okay. All right, so I'm sharing the screen shortly. Yes, practical questions. This is on PEFA. We've looked at some already in class, but I felt like us looking through this practical question. So I'll read the question. The government of Ghana has the following scores for Pillar 1. Pillar 1 is budget what? Reliability. There are 7 pillars, so you should know all. For Pillar 1, budget reliability. In the 2020-2021 PEFA report, Pillar 1 has 3 indicators. Pillar 1 has 3 indicators: aggregate expenditure outing, expenditure composition outing, and revenue outing. The following relate to the 2 of the indicators together with their dimensions. So pillar, with the pillars, they have sub what indicators. Then the sub indicators have sub dimensions. So per this question, the question is telling us that the following relate to 2 of the indicators together with their dimension. These indicators are under the pillars and the dimensions are under the indicators. Is that right? So expenditure composition item. For this question, which is the first one, or yes, aggregate expenditure, no, the second one, expenditure composition item, sorry, and then revenue outing. So the last 2, they are giving us the dimension for the last 2 indicators. Is that okay? So look at expenditure composition outing. Under it, we have expenditure composition outing by function. The score is D. The numerical value assigned to D is what? 1. 1. The numerical value assigned to D is 1. Then expenditure composition outing by economic type, C. The numerical value assigned to C is what? 2. Just like we look at in class. Okay. Expenditure from contingency services, B. That's the score. The numerical value is also what? 2. Okay, let's look at revenue item. Aggregate revenue item C. That is 2. Revenue composition item. That is 1. Now the question. The aggregate score for each indicator is calculated using the appropriate method, weakest link method and average method. Yes, there are 2 methods that can be used, and we look at all this, and we should be familiar with how to use all average and then weakest link required. Calculate the aggregate score for each of the 2 indicators and interpret your results. Very, very simple question. Very, very simple question. Is that okay? And then this is question 2. I think if you look at question 1, it's somehow similar to the last question we look at today in class. Calculate the aggregate score for each of the 2 indicators and interpret your results. So we have D, C, B. Is that okay? If you are using the weakest link, what does the weakest link say? I know if it is average, that one you can easily do it because you find the total, or let me say you find the average. You then use the average to say the score, then you interpret. If you give it 2 point something, 3 point something, 1 point something. But the weakest link method, this system is having D, but it has C and also what? B. So the D that is having is canceling or is overriding the C and B it has. But the C and B are good measures. And this is D. If you remember, so what will be the last, what will be the score using the weakest link method for expenditure composition item M1 using the weakest link method? I'm not going to go to average link method because that one I know, and it's very easy because you just assign the scores, you add everything, you find the average, then that will tell you. But how about weakest link method? D, C, B. It means for this performance indicator, the dimension, which is expenditure composition item by function, is the weakest among them all. But then expenditure composition item by economic type is doing well, C. C is the minimum. Expenditure from contingency reserve, B. B is also very good. So how do you score and interpret the results using the weakest link method? Yes, that's a very nice question you may want to think about. It's very easy if you join the class at the CBS, and I invite all prospective ICAG students to come to the CBS and come and meet lectures there. If you are in level 400, you want to start your ICA, you have finished your ICA about doing your national service, and you want to do it for national service, the CBS is there. Or you can always reach out on my online platform for quality teaching. If you go to the CBS, say you are looking for Albert Ado, and he will register you for you to have quality tuition. Okay, let's continue. Let's look at question number 2. The government of Ghana has the following scores for Pillar 1, budget reliability. You remember when we met today, I told you, okay, some of the pillars will apply more to, let me say, central government. So if you look at budget reliability like this, that is at the central government level, isn't it? Because the Ministry of Finance prepared the budget, right? Okay, for Pillar 1, which is budget reliability, in the 2020-2021 paper report, Pillar 1 has 4 government operations outside financial reports, transfer to subnational government, performance information for service delivery, and public access to financial information. So you see, these are the performance indicators with their sub dimensions. The following relate to 3 of the indicators together with their dimensions. So performance indicator 1, which is central government operation outside financial reports. We have expenditure outside financial reports, D. Revenue outside financial report, B. So D is 1, isn't it? B is 3. Financial report of extra budget limits, A is 4, the numerical value 4. Okay, now let's look at transfers to subnational governments. System for allocating transfers, A. Timeliness of information on transfers, D. Performance information of service delivery. The dimensions are performance plans for service delivery, A. Performance achieved by service delivery, B. Resource received by service delivery units, C. Performance evaluation for service delivery, D. Please hold on for a minute. I'll get back. I need to respond to something very urgent. Okay. Sorry, I needed to respond to something urgent. I'm back with you. Okay, so these are the performance indicators under pillar 1 with their various dimensions. Now, the question goes on to say the aggregate score for each indicator is calculated using the average method. This one, the question is so clear and straightforward to us that using what? The average method. The average method is the simplest to use. And if you know how to do it, is A, the numerical value assigned to it is 4. B, the numerical value is 3. C is 2. D is 1. So you add 4, 3, 2, 1. What do you get? All over 4. The average. Then the value you get will tell you that whether the dimension is either A, B, or C. If it is 1, you know what it is. If it is 2 point something, 3 point something, 2 point something, you know how to interpret or rate it. Either it's a C plus or a B plus. That is how it works. calculate the aggregate score for each of the 3 indicators and interpret your results. Very, very, very simple and straightforward that you can do. And then after getting it, then you tell us, or you tell the examiner whether it is A, B, B plus, C, C plus, or D plus. If it is C, what does it mean? If it is D, what does it mean? Then you explain your results without forgetting that, and therefore it either meets international standards requirements or it doesn't, based on your interpretation. Okay, these are things we've looked at already in class. If you are visiting viewer on my YouTube page for the first time, you are going to find a few challenges, but it's very, very simple. If you are in class, then we meet here again. Okay, so it means that we are done with PEFA. Yes, it means we are done with PEFA. We will solve one more practical question on PEFA when we meet next weekend at the CBS. When we meet next weekend at the CBS, that is 2nd July. Yes, 2nd July, we will meet. And then that one is going to be practical. Okay. Now let's move on to our next chapter, which is fund accounting. We introduced this topic in class. We introduced it in class today, and I asked you to read on it, but we mentioned a few things. Some of you gave me some examples, but let's look at it now that I want to put it. So we're going to look at fund accounting. Don't forget, when we were doing introduction to public sector accounting, when we were looking at the differences, we said public sector accounting uses what? Fund accounting. While private sector uses proprietary accounting. So what is fund accounting? To define fund accounting, what is a fund? If you say fund, what do we mean? So what must we know at the end of this topic that we are about looking at? At the end of it all, we should be able to outline the sources of revenue and expenses charged to specific funds established by an act of parliament. Yes, I believe you've heard so many funds. Have you heard Ghana Education Trust Fund, GET Fund, Social Security and National Insurance Trust Fund, SSF, Road Fund, Consolidated Fund, Statutory Fund, Heritage Fund, Contingency Fund, Petroleum Revenue Management Fund. Yes, you've been hearing fund. So at the end of this lesson, we should be able to outline the various sources of revenue and expenses charged to a specific fund established by an act of parliament. Yes, established by an act of parliament. Okay, we should be able to explain the disbursement of petroleum funds. Yes, Petroleum Revenue Management Fund. I mentioned that. Okay, then lastly, we should be able to outline those who qualify to apply for the Zongo Development Fund. Okay, the biggest question, like I said, what is a fund? A fund is a sum of money aggregated from a specified source for a government unit to obtain specific objective under certain regulations. A fund is a sum of money aggregated and earmarked from specified sources of government units to obtain specific objectives under certain regulation. So a fund is an amount of money that is aggregated, or that is collected, and it is earmarked or geared towards achieving a specific objective. Is that okay? Based on certain regulations. If we look at the learning objective, we said outline the sources of revenue and expenses charged to specific funds established by an act of what? Parliament. So any fund is earmarked towards a specific objective under certain what? Regulation. The word regulation is underlined. When you say under certain regulation, it means there's a certain oversight, responsibility or authority that regulates that particular entity, its activities, and everything. Regulation. In this case, Parliament. It could be an act of Parliament establishing that fund, GET Fund, Petroleum Revenue Fund, Ghana Infrastructure Investment Fund, Road Fund. So the fund created by collecting or aggregating money into that specific fund for a specific objective under certain regulation. So if it is GET Fund, Ghana Education Trust Fund, it is earmarked towards development of only education. And therefore, any fund in a GET Fund should not be used for a health sector program or activity, because that was not the objective or purpose of establishing a GET Fund. If it's about health, recovery, something, or national health insurance levy, that is health, it's for health. So fund accounting. Since the fund is a separate entity, it should be accounted for using a separate identifier set of accounts to make it simple to identify the assets and liabilities of the fund specifically. Yes, every fund is self-balancing and is a separate entity. Like I said, if it is GET Fund, it is GET Fund. If it is Road Fund, it is Road Fund. You do not mix it towards other fund or other activities. And therefore, at the end of the day, all liabilities and assets charged on that fund balances or zeroes out without any cause for difference or something. That is a fund. Okay, let's look at fund accounting. Fund accounting is a matter of information that groups resources in fund based on their source and the use of those resources. When you take Petroleum Fund, what are the sources of revenue into the Petroleum Fund? And then what are the expenditures charged against those funds? So as a result, fund accounting reports in terms of fund rather than in terms of organization. Yes, we are reporting based on GET Fund, Road Fund, Petroleum Fund, Consolidated Fund, Zongo Development Fund. So it is a fund earmarked for Zongo Development, GET Fund, Petroleum Fund, Road Fund, that we are reporting on, not an organization. Not an organization. Okay, let's look at features of fund accounting system. Features of fund accounting system. Fund accounting is influenced by the legal framework that establishes it. Yes, like I said, every fund is established by what? An act of parliament specifying the objectives, specifying the receipt into that fund, specifying the disbursement out of that fund, specifying the transfer that can be made from that fund to other fund. Okay, fund accounting depends on statute law, statutory instruments, and convention that influence the fund's operations. These laws specify the sources of revenue into the fund. I mentioned that. The fund's expenditure, that's a disbursement from the fund. The assets and liabilities of the fund. Yes. What asset has that fund? Aqua, What are the liabilities charged against it? Remember, if it's about petroleum revenue or debt fund, we will need assets in managing or administering anything that has to do with what debt fund. When there are assets, obviously liabilities cannot be overseen, or say there's something like liability. No. So the second feature of fund accounting is that it reports in terms of units or funds rather than organization. Yes. So we are reporting on a road fund and not the Ministry of Roads and Highways. Ministry of Roads and Highways, road fund. How much has been collected? How much has been used? We are reporting on the fund and not the ministry. Okay, the organization is seen as a series of funds or a series of reporting units. So the financial reporting for the organization is an aggregate of the individual reports of the constituent funds. The third feature of fund accounting is that it represents a specific function or activity within an organization. Ministry of Roads and Highways, road fund, and it represents a specific function or activity within the organization. Okay, let's continue. The fund is seen as a subdivision of the fiscal activities of reporting units within the organization that utilizes part of the organization resources. Fund is a separate accounting system operating within accounting framework of the organization with a self-balancing set of accounts. Yes, in your definition of fund, don't forget to bring this phrase or this sentence with a self-balancing set of accounts when you're defining fund or fund accounting. Don't also forget it's a separate accounting system. Fund is a separate accounting system operating within the accounting framework of the organization with self-balancing set of accounts. Okay. The next feature of fund accounting is that fund represents a separately identifiable entity. A separately identifiable entity. A fund transacts within itself with other funds within the same organization and with external parties. Fund accounting, we are looking at the last feature of fund accounting. Fund accounting may be influenced by annual estimates approved by Parliament. Yes. Fund accounting may be influenced by annual estimates approved by Parliament. It means allocation from the national budget. Let's say a portion or a percentage of so much collected by way of revenue, tax revenue, non-tax revenue should be directed to, let's say, this kind of fund, X kind of fund, aside what that fund can also be generating on its own. Hence, this requires annual balancing and reporting as may be required by Parliament, meaning not that you are receiving your annual estimate from the national budget based on approval doesn't mean you are not going to account for. No, accountability is key. Let's look at the objectives of fund accounting. Accountability and stewardship. These are the objectives of what? So that when we say road fund, who are those managing the road fund? How much have we paid into the road fund? Was that amount paid into the road fund used for its objective for which Parliament has established that there should be something called a road fund, a debt fund, a social security and investment, insurance, trust fund? You say you have incurred as expenditure, or you have incurred this expenditure, let's say 10 million USD. You have incurred 10 million USD expenditure. Expenditure on what? What are the details of the expenditure you have incurred? You can't just tell us that you have spent so much. Tell us the expenditure. What were the payments into it? Accountability and stewardship. So if you are targeting road fund and we are scrutinizing and auditing and monitoring the performance of road fund, We can easily do that. This serves as what? Accountability and stewardship for public officials who manages those funds. Determine financial condition. Yes. Fund accounting also determines the extent to which the fund available can be used to achieve the fund's objectives. That is, it is aimed to recognize the market value of all assets of the fund and the fund liability to ascertain the fund balance. Don't forget, when we were looking that the fund has a self-balancing. It has assets and it has what? Liabilities. So how do you determine the financial condition of a particular fund? By knowing those assets and liabilities charged against those funds, isn't it? Then one objective of fund accounting is budgetary control, which assists in budget control by providing information to enable managers to keep expenditure within allocation and demonstrate compliance with funding sources. Yes, every fund has a source, and with the source come with its condition or compliance requirements. That you can't do certain things beyond certain level, and that expenditure must always be kept within allocation. Yes, budgetary allocation, an objective of fund accounting. The fourth objective is that it helps in forecasting cash flow, or forecasting cash flow involves determining the amount of cash coming into the fund, how much is going out, and how much is required to meet contingencies. Yes, that is very, very true. Now, let's look at government funds. Government funds. Government funds. These are funds that are established from public resources for public purpose. In Ghana, government funds are called public funds. They include General Fund, Special Revenue Fund, Debt Service Fund, Capital Project Fund. Let's look at General Fund. The General Fund is established to meet expenditure for general government business. Yes. The General Fund is established to meet what? General expenditure for general government business. It is an all-purpose fund. In Ghana, when we talk about the General Fund, we mean the consolidated fund. Is that okay? Special Revenue Fund. Special Revenue Fund. Special Revenue Fund is used to account for the process of specific revenue sources, restricted or committed to expenditure for specified purpose other than debt service or capital projects. So look at the definition. There is a special revenue fund and used to account for process of specific revenue sources, restricted or committed to expenditure for specified purpose other than debt service or capital projects. It means all monies in these funds are not used for debt servicing or capital projects. An example is a GET fund, road fund, and then district assembly common fund. GET fund will be used for what? Educational purposes. Okay. Debt service fund, or you can say sinking fund. They can actually define the following or list and explain any fund you know. Sorry. Or the examiner will just give you the fund, then you will explain. Is that all right? Debt service fund or sinking fund. This fund is used to account for accumulation of restricted, committed, or assigned resources and general long-term debt principal and interest payment. Yes. So the debt service fund or sinking fund is used for, it's a fund created for the payment or servicing of what? Debt. IMF, World Bank, African Development Bank, African Bank for Reconstruction and Development, Let's look at Capital Project Fund, used to account for financial resources that are restricted, committed, or assigned to expenditures to acquire and construct major capital facilities. So you see that Capital Project Fund is a direct opposite of Special Revenue Fund. Have you realized or noticed that? Capital project is used to account for financial resources that are restricted, committed, or assigned to expenditures to acquire and construct major capital facilities or projects. Procurement interchange, Obichibi Lamte interchange. Name them. An example is the proposed Ghana Infrastructure Fund. We look at Ghana Infrastructure Fund, the act. I think I've shared the act on the WhatsApp page. We will look at the objectives, the requirements. What does that particular act say? Ghana Infrastructure Fund. We will look at it in detail. Proprietary Fund. Proprietary Fund. Proprietary Fund. Proprietary Fund. Proprietary funds also used to account for government ongoing organizations and activity, similar to businesses found in the private sector. What comes into your mind? Government business enterprises, isn't it? GBEs. Okay. These funds are considered self-supporting in that the service rendered by them are generally financed through user charges or on a cost reimbursed basis. Proprietary funds are used to account for government business type activities. Proprietary fund. Know the definition and the purpose of all the various funds. The examiner can ask you questions on that. So let's look at types of proprietary fund. There are two main types: enterprise fund, internal service fund. Okay. Enterprise funds are used in situations where fund provides service primarily to external customers. Enterprise fund. Then internal service fund should only be used if the state is the predominant participant in that particular activity. So internal service funds are funds used to account for provision of goods or services by one department or agency to other department or agency of the state or to other government units on a cost reimbursement basis. Internal service funds. Let's look at fiduciary fund. Fiduciary fund. Fiduciary fund used to account for assets held by government units in trustee capacity. Fiduciary used to account for assets held by government units in a trustee capacity or as an agent for individuals, private organizations, and other government units. When you are holding monies or assets in trust on behalf of agents or individuals, private organizations. So the types of fiduciary funds you can think of are pension trust fund, example, SNET, investment trust fund, private purpose trust fund. Let's look at pension trust fund. It used to report resources that are required to be held in trust by the states for the members and beneficiaries of defined benefit pension plans, defined contribution pension plans, and employee benefit plans. In Ghana, we have Social Security and National Insurance Trust Fund. So that's a pension fund under a fiduciary fund. Is that okay? Investment fund. Investment funds are used to report the external portions of investment pool, that's local government or other entities, which is supported by the state as sponsoring governments. So we have private purpose fund, you can look at it, agency fund. This is used to account for resources held by the state in purely custodial capacity for other government, private organizations or individuals. Yes, agents and principal relationship. So this has got to do with what? Agent and principal relationship. The agency fund is used to account for resources held by the state in a purely custodial capacity. You are holding it in custody for other government, private organizations, or individuals. Fund financial reporting. Let's look at fund financial reporting. Each fund requires to be separated accounted for and reported on as an entity. Financial reports of funds include fund statements. So for all the funds that we've looked at, assuming that to produce a report on all to Parliament, being it Public Accounts Committee of Parliament, being it Finance Committee of Parliament, Audit Committee of Parliament, or whoever. What are the reports that are expected of us or that we need to generate? Fund statements, receipt and payment statements, revenue and expenditure statements, statement of financial position, cash flow statements, and then notes to the accounts. These are things we've looked at in the various lessons by way of practicals. Okay, public funds of Ghana. When we say the public fund of Ghana, what do we mean? So in Article 195 of the Constitution provides that the public funds of Ghana shall be made up of what? The consolidated fund. Now, that is not only the consolidated fund. The second one is a contingency fund and other funds established by or under an act of Parliament. It means that the Minister of Finance on his own judgment, or the President, or any minister cannot stand up and say they are establishing a fund. No. There are statutory funds that have been established, or constitutional funds established by the Constitution, as seen in Article 195 of the Constitution, which establishes what? The Consolidated Fund, Contingency Fund, and other funds established by an act of Parliament. Okay, so what makes up public funds? We have the Consolidated Fund, like I mentioned earlier, the Contingency Fund, and then other funds like the District Assembly Common Fund, Get Fund, Road Fund, Ghana Infrastructure Fund, Petroleum Fund. Is that okay? What is Consolidated Fund? The Consolidated Fund has its existence from 1992 Constitution. That is in 3 articles, 175, 76, and 78. Now, the Consolidated Fund is a general fund of government into which all receipts are paid into, and out of which all withdrawals, except those that are charged on other funds, are made from, in accordance with the Constitution. Yes. So all tax revenue, all non-tax revenues, all donations, all grants are paid into the Consolidated Fund, and all withdrawals, except those that are charged on other funds, are also made from the Consolidated Fund in accordance with the Constitution. Now, you can be asked to define the Consolidated Fund, or what makes up the Consolidated Fund. Is that okay? Now, the Consolidated Fund has the main fund of government, out of which other splitter funds can be created. It means that within the Consolidated Fund, other subsets of funds or other subsets can be created from the Consolidated Fund. It means that the Consolidated Fund is the universal fund of government or Ghana. Is that okay? Let's look at Contingency Fund. This is established by Article 177. It is created to account for urgent or unforeseen need for which no other provision exists to meet the need. A classical example I've always been citing has to do with COVID. When COVID struck globally, it means Ghana will have to fall on what? Contingency Fund. Because these are have to be created to account for urgent or unforeseen need for which no future or no other provision exists to meet. Now, the urgency or unforeseen circumstances may include natural disaster, social disorder, and other similar events like COVID. Now, advances made from the fund should be replaced as soon as possible by introduction of what supplementary estimates to Parliament. To that effect, at this stage, I presume you know what we mean by supplementary estimates, and so I'm not going to explain supplementary estimate. Now, the fund is resourced from the monies voted by Parliament for that purpose, and withdrawal is effected through the request of the President to the Public Finance Committee of Parliament. If you are able to write this little thing about contingency fund in an exam, you should be able to get all your marks. Is that okay? Okay. Let's look at provisions from the Public Financial Management Act 2016, Act 921. So we are looking at section 36 of Public Financial Management Act, which is on what? Contingency Fund. Provisions from the Public Financial Management Act 2016, Act 921, Section 36 on Contingency Fund. So this is how the Act talks about Contingency Fund, directly from the Act as I read. There shall be paid into the Contingency Fund monies voted for the purpose by Parliament, and advances may be made from the Contingency Fund, which are authorized by the committee responsible for financial matters in Parliament, whenever the committee is satisfied that there has arisen an urgent or unforeseen need for expenditure for which no other provision exists to meet the need. So whenever there is any unforeseen expenditure that has not been budgeted for due to any social disorder, natural disaster, global pandemic, or whatever, then it means that the agent needs to fall on the Contingency Fund. Where an advance is made from the Contingency Fund, a supplementary estimate shall be presented as soon as possible to Parliament for the purpose of replacing the amount advanced. Yes, meaning that any monies advanced from the Contingency Fund must be paid back by way of preparing what? A supplementary estimate submitted to Parliament for approval, so that that money that was taken from the Contingency Fund to meet an unforeseen need will be replaced or paid back. It's as simple as that. Let's look at other public funds that we may think of. The other funds established by or under an Act of Parliament include District Assembly Common Fund. They can ask you in the exams, list any 5 funds that is established by Parliament. District Assembly Common Fund, Ghana Education Trust Fund, GET Fund for short, Road Fund, Venture Capital Trust Fund, Petroleum Related Fund, Ghana Infrastructure Fund, DIF, Contingency Reserve Fund, and Pension Fund, SNET. Is that okay? Let's look at Ghana Education Trust Fund. Now, in learning fund accounting, like I said, always try to know the objective of establishing that fund. That is number 1. Number 2, ask yourself, what are the sources of revenue into that fund? And then what are the payments from that fund? Not forgetting any restriction placed on that fund. There are some funds that has got restriction on them. So let's look at Ghana Education Trust Fund, which is established by GET Fund Act 2000, Act 581. So you see, the GET Fund is an act of Parliament. The objective of the fund is to provide finance to supplement the provision of education at all levels by the government. Yes, that is the objective. That's all what you need to know. It is to provide funds for the development and maintenance of essential academic facilities and infrastructure in public education institutions, especially tertiary institutions. It is a special revenue fund. Means GET Fund cannot be used for construction of roads and bridges and dams and what have you. Is that okay? All right. What are the sources of money into the GET Fund? Don't forget, we said the consolidated fund is the mother account or the universal or the main account of government or Ghana. So other sub accounts have been created from the consolidated fund. What are the sources of revenue into these other sub funds? So we are looking at GET funds. What are the sources of revenue into GET fund? Now, 2.5% of VAT transfer from the consolidated fund monthly. Yes, those of you who are working, anytime you receive your VAT invoice, you see NHL levy 2.5, you see GET fund levy 2.5, COVID-19 levy 1%. So you see, it means that at the end of the month, when you are filing your VAT returns to the GRA, assuming you are not charging VAT, you are not paying VAT on the things you buy, but you charge VAT on the things you sell. When you collect the 2.5 VAT, at the end of the month, by the last working day of next month, you have to file and pay for your VAT. That 2.5% bit on the invoice goes into the consolidated fund, because all government revenues, whether tax revenue or non-tax revenue, first hit the consolidated fund. Then from the consolidated fund, 2.5% of VAT is transferred from the consolidated fund monthly. It means we collected a 2.5 VAT or levy, GET fund, paid into the consolidated fund because it's a major or the mother account. Then, because there are sub accounts, 2.5% of this will be paid into a GET fund account. Then, number two is that there are other monies allocated by Parliament that also hits the GET fund account, or let me say, yes, the GET fund account. Then other donations, yes, GET fund, Ghana Education Trust Fund can be receiving donations from external parties, let's say the Danish government, Canadian government, German government, Chinese government, and other international, educational, philanthropic, or non-governmental organizations. Is that okay? So donation, grants, and gifts, income from investments. Yes, they may decide to invest some of the funds in their accounts, and these are sources of monies for them. Now, while we are looking at sources of money on them, it means there's obviously be what expenditure charge on that fund. So these are what educational infrastructure, building of what school structure, story buildings, buying buses, bone shakers, pickups, education infrastructure, mono desks, those kind of things, renovations in schools, scholarships, student loan scheme, faculty development and research, facilities such as vehicles, laptops, like I said, allowances of the board of members. Yes, the board of members on the GET fund will pay the allowance, and this is charged on the GET fund accounts. And then other educational activities as approved by the Minister of Education. Let's look at Road Fund. Road Fund. It was established by the Road Fund Act 1997, Act 536. That's a long time ago, huh? Yeah. Is it established by the Road Fund Act 1997, Act 536. The object of the Road Fund is to finance routine, periodic maintenance and rehabilitation of public roads in the country, and to assist metropolitans, municipals, and district assemblies in the exercise of their functions relevant to public roads under any enactment. The question is that something like Road Fund? If there's something like Road Fund, how effective is the Road Fund working? Is that okay? What are the sources of monies into the Road Fund? Proportion of government levy on petrol. Yes, it means the petrol you have been buying to your cars, the petrol you have been paying. By one way or the other, you are paying some monies into the Road Fund. Diesel and refined fuel oil, as may be determined by cabinet approval of what Parliament. Then bridge, ferry, and road tolls collected by the authority. Yes, previously they collect road tolls until recently when the finance minister read the budget in November last year, cancelling payment of all tolls on our roads. So those various toll booths in Ghana, the toll we pay form a source of revenue into the road fund. Vehicle licensing and inspection fees. Yes, when you take your vehicle to DVLA to go and do road welding, you pay some fees. All those money goes into the road fund. There are others like international transit fees collected from foreign vehicles entering the countries, and as the minister is responsible for finance, in consultation with the minister may determine. Yes, so these are sources of revenue. In the exams, they can ask you, list 3 sources of revenue into the road fund. List 3 sources of revenue into the GET fund. List 3 expenditures charged against the road fund. They can ask you this in the exams. All right, let's look at the expenditure charged against the road fund. 1, routine and periodic maintenance of roads and related facilities, upgrading and rehabilitation of roads, road safety activities, selected road safety projects. So you see, all road safety. If the road spoils, that we come and do maintenance. You have to erect traffic lights. If you have to read road signs and all those kind of things, all these are expenditures. That's a charge on them. Okay. Venture Capital Trust Fund. It is established by Venture Capital Trust Fund Act 2004 Act 680, and the objective is to provide financial sources. Is that okay? For development and promotion of venture capital financing for small and medium enterprise in priority sectors of the economy, as shall be specified from time to time. Yes, a venture capital trust fund, or should I say white angels, venture capital. They support small businesses that want to find their feet in business. They fund them for them to flourish. Venture capital, sources of money to the venture capital trust fund. The amount of money equivalent to 25% of proceeds of the National Reconstruction Levy with effect from 2003 financial year. An amount of money equivalent to 25% of the proceeds of the National Reconstruction Levy with effect from 2003 financial year. The such monies as the ministry with approval of Parliament may determine fees and other monies earned by the fund in pursuant of its functions under this act. So it means its internal revenue, right? Monies that accrues to the fund from investments made by the board. All what I'm trying to say or let you understand is that you will be asked in the exam, okay, to list the sources of money into a particular fund. And it's very important that you know. Do not forget. All right. Then likewise, we look at the expenditure, the provision of credit and equity financing to eligible venture capital financing companies. It's a revenue, it's an expenditure charge against the venture capital trust fund. Then provision of monies to support other activities and programs. Is that okay? Let's look at petroleum related fund. Petroleum related fund. Sources of petroleum revenue in Ghana. Petroleum revenue in Ghana is a very topical and interesting area in public financial management of Ghana that we cannot overlook. Is that all right? With the discovery of oil in Ghana, petroleum revenue has become so much interesting for its accountability and usage. So governments around the world usually adopt one of 2 major fiscal systems for petroleum. Yes, in accounting, please pay attention. You're very careful. Governments all over the world has adopted 2 ways of accounting for petroleum revenue. Is that okay? Governments around the world usually adopt one of 2 major fiscal systems for petroleum. These are the royalty tax or licensing system to govern the fiscal regime for her petroleum sector. So, in accounting for petroleum revenue, there are the royalty tax and then the licensing system. Royalty tax and licensing system. These are the accounting methods that are used to account for petroleum revenue where in Ghana. The state, in this case, GNPC, Ghana National Petroleum Commission, is that okay? Has chosen the tax system. So I said the system of accounting are how many? Two. Royalty tax system and the licensing system. But Ghana, under the Ghana National Petroleum Commission, which is the body responsible for managing petroleum revenue in Ghana, has adopted or chosen the royalty tax system to avoid high exposure in petroleum exploration and production activity, since the system allows the state to benefit from exploration of its resources without making any financial contribution. Yes. So Ghana chose the royalty tax system in order to benefit from exploration of oil resources without making any financial contribution. It means had Ghana chosen the licensing system, it would have to be making what financial contribution. Take note of this. In accounting for revenue in Ghana, petroleum revenue, there are two systems of accounting, royalty tax and licensing system. But Ghana has chosen what? The royalty tax. Let's go into detail. However, even before production commences, when all the agreements will be put to test, creditors have argued that Ghana would obtain much more benefit under the terms of production sharing contracts than under the royalty system. That is a school of thought. The fiscal package consists of royalty. Okay, pay attention here too very well. What are some of the packages? What are some of the revenue streams, the ways and means that Ghana can gain revenue from petroleum production in Ghana under the royalty tax system? Pay attention. This is examinable. The fiscal package consists of one, royalty. So royalty is a way that Ghana or government of Ghana can gain revenue from petroleum activities in Ghana. Royalty is one. Then we have carried interest. We'll come and look at all this in detail. Paying interest, additional oil entitlements, petroleum income tax, and annual surface rental. Take note of these 5 things I have mentioned. That these are some of the package of revenue streams that Ghana can earn more revenue from petroleum activities in the country. Royalty, carried interest, paying interest, additional oil entitlements, petroleum income tax, and annual surface rental. In addition, there are also indirect tax obligations in the form of local content requirements, domestic supply obligation, and decommissioning. Petroleum revenue tax is a direct tax that the government of Ghana will collect to have fairer share of profits for the nation from exploring Ghana's continental shelf and ensuring a suitable return on the capital investment by contractors, that is, the oil companies. Just like I said, let's look at the revenue streams, receipts that government take from petroleum sector. Yes, these are various revenues that Ghana government takes or gets from the petroleum sector. The first one, like I mentioned before, is what? Royalties. If you are an oil company and you come to Ghana, you go deep into the sea or wherever, and you discover that there is oil reserve deposit somewhere, and you begin to explore, you begin to produce in commercial quantity. Don't forget, the state, once you are exploring or doing that production on the shores of Ghana, you are bound to pay royalty to the government. Is that okay? Yes. Even if the oil reserve is deposited under your body, your house, which you bought the land with your own money, bought it your own money, and we have now realized or discovered that there's oil reserve there. It doesn't belong to you or you alone. You have to pay royalties to the state, and it's a revenue stream or receipt that government can take from you. So let's look at royalty. As per the agreement, when we say agreement, we mean the PA. PA means Petroleum Agreement. Before any oil company or investor starts to enter into oil, petroleum production or whatever, there's something we call Petroleum Agreement. This must have been entered into long before exploration, production, and other things come into play. Is that okay? So when I say as per agreement, I mean the Petroleum Agreement. As per the agreement, the government of Ghana imposes levy as royalty, which may vary among contractors. Royalty levy as percentage of gross value of oil or gas won or produced, irrespective of profitability. Listen here very carefully. In calculating royalty, we are saying that we calculate the royalty based on what? Gross value of oil or gas won or produced, irrespective of profitability. So here we are not talking about a percentage of say 1% of your profit as royalty, but rather any amount, barrels of oil or gas that you have produced. So in simple terms, the royalty percentage is on the revenue and not on profit. That's all what I want to say. The figure is on what? Revenue and not on profit. And revenue without any deduction, gross. So if you have produced 100 million barrels of oil, government has a percentage by way of what? Royalties. The rate ranges between 4% and 12.5%, depending on each contractor's petroleum agreement. So you can have 5% of total oil or gas revenue, 7%, 10%, etc. on the gross revenue, not profits. Don't forget, profit is sales revenue minus cost of sales minus other general administrative expenses. Then you arrive at profit. That's what we are looking at. We are looking at a gross revenue at the top there, either 5%, 7%. They can ask you this question, especially those of you who will be doing advanced taxation at the final level, and those of you who will be writing CIT. These are questions that the examiner is keen on asking as far as petroleum revenue management is concerned in Ghana. Let's look at participating or carried interest. Participating or carried interest. Participating or carried interest entitles the GNPC. Now the GNPC is the spokesperson of government in terms of negotiation of oil revenue and other matters relating to oil revenue. Is that right? So participating or carried interest entitles GNPC to 10% of any distribution of petroleum or revenue to interest holders in any petroleum operation. GNPC or the state does not pay exploration and production expenses. So with participating or with participatory or carried interest, the state will or is entitled to what? 10% of any distribution of petroleum or revenue to interest holders in any petroleum operation. Here, GNPC or the state does not pay exploration and development expenses. When we say exploration and development expenses, these are pre-production expenses that come before oil reserves are produced in commercial quantities. Before production will start taking place, there must have been expenses that can be incurred. So the states, being led by GNPC, do not have to pay anything on exploration and development. The state or GNPC does this on behalf of the state, just like I said. The state contributes to production cost. Yes. So here, you, the petroleum company, you have identified the oil reserve from exploration, development expenses, all those preliminary expenses. Ghana is not going to pay some. The state is not paying, but the state will only pay money or contribute in production cost, and they'll be enjoying participating or what carried interest. Take note. You may meet it somewhere in your life as far as you are studying for your ICAG exams. Let's look at additional interest. Additional interest. After the discovery of petroleum in commercial quantities, GNPC on behalf of the state will be required to pay an agreed percentage of the development and production cost to acquire additional interest in any petroleum operation. This entitles GNPC to additional interest in any distribution of petroleum or revenue to interest holders. Just look at the distinction between additional interest and participatory or carried interest. With additional interest, after the discovery of petroleum in commercial quantities, the state, which is led by GNPC, will be required to pay an agreed percentage of development and production. An agreed percentage of what? Development and production cost to acquire additional interest in any petroleum operation. Notice the difference between participating or carried interest and additional interest. Notice this very well. Let's look at additional oil entitlements. The additional oil entitlements is an additional profit tax based on the rate of return achieved. The state is entitled to additional oil if the contractor or the oil company achieve a specified after-tax real rate of return. Yes. The examiner will be looking at this words, so you have to underline it. The state is entitled to additional oil if the contractor achieve a specified after-tax real rate of return. The contractor rate of return is calculated on its net cash flow under a formula specified in the petroleum agreement. The purpose of this revenue is for the state to share in the excess profit accruing to the contractor. Yes, if the contractor estimated that he will produce or make profit of so much, but then the real rate of return exceed what he expected, then it means there's an additional oil entitlement. If you say you will make 10 million USD and you end up making 15 million, it means the state also has a share by way of additional oil entitlements. Surface rental. Surface rental, here the government charges surface rentals per square kilometer of the area occupied. So it is a whole land area. The land surface we are occupying is what you are going to pay. Some of us are familiar with what? Paying square kilometers for warehouses. That if you occupy 10 square meter, you will pay this. Is that okay? The same thing, the land area that you are exploring or doing the petroleum production or whatever that you are occupying, you'll be paying surface rental. So this one is based on square kilometer. This one is based on what? Square kilometer and not on percentage. The rates charged by the contractor for such rentals or service shall not be more than the rate charged to other members of the public who receive similar service rental. In defining service rental, the examiner will be looking at the government charges surface rental per square kilometer or acreage. So they can say in the first year, if we are occupying 5,000 square kilometers, you may be paying 50 USD per month or per annum. In the second year, it could increase in that order. Is that okay? All right. Petroleum funds. Petroleum funds. Petroleum funds. Under the Petroleum Revenue Management Act 2011, Act 1815, 3 funds are created. Yes. So under the petroleum funds, please I think I have posted at 815 on the page, on the WhatsApp page. If I haven't, I'll do that. Or remind me or myself, I'll check on the page and then I'll post it there. As far as in as much as we are studying ICA, you should be conversant with all these acts, regulations, practice notes, and what have you. Okay, so petroleum revenue has three main things. We have the Petroleum Holding Fund, Stabilization Fund, and then Heritage Fund. So let's look at Petroleum Holding Fund. The Petroleum Holding Fund is established to receive the disbursed petroleum revenue due to the state. Yes. So the Petroleum Holding Fund is the first fund that received what? Petroleum revenue. The mother account or the mother fund for any petroleum revenue is the Petroleum Holding Fund. All petroleum revenue must be deposited into the Petroleum Holding Fund with the Bank of Ghana for subsequent transfer to the Stabilization Fund, Heritage Fund, and the Consolidated Fund. Yes. So there's a fund created, Petroleum Holding Fund, held with the Bank of Ghana. And any revenue that relates to petroleum must first be lodged or deposited into the Petroleum Holding Fund. Then later, this fund will be transferred to the Stabilization Fund, the Heritage Fund, and the Consolidated Fund. So you see, a special fund has been created for petroleum revenue. Now, take note that there are certain restrictions on the Petroleum Revenue Fund. That fund or that money in the Petroleum Revenue, the Petroleum Holding Fund cannot be used to do certain things. They can ask you in the exams and take notes. Restrictions on the use of Petroleum Holding Fund. 1, it cannot be used to provide credit to government or any other entity, whether private or public. It means government of Ghana cannot go into the Petroleum Holding Fund and borrow money from it to pay later or to use for any other thing. No, that is a restriction. And that is enshrined or in Act 815 as a Petroleum Revenue Fund powered by Parliament. Okay. The second restriction is that it cannot be used as a collateral for debt, guarantees, commitment, or other liabilities. It means government of Ghana cannot go to IMF or World Bank and say, oh, we have a fund called Petroleum Revenue. We have received some money into it. Can we use it as a collateral? So other people will give us a loan. No, it's a restriction. We cannot do that. Now, just like any other fund, what are the receipts into the Petroleum Holding Fund? Royalties for oil and gas. So all the things we looked at, those are defined. Royalties, additional oil entitlements, surface rental, name them. Royalties for oil and gas, additional oil entitlements, surface rental, sales or export of petroleum and other receipts from operation. Yes, these are all receipts into it. They can ask you, let's try receipts into the Petroleum Holding Fund. 2, revenue from direct or indirect participating in petroleum operation. Yes. Revenues from direct or indirect participating in petroleum operation. Corporate income taxes. Yes. If you're a petroleum company and you are engaging in petroleum, you have to pay a corporate tax of what? 35% of your profits. So revenue from direct revenues from corporate income taxes from upstream and midstream petroleum companies. Then taxes, royalties, dividends, etc. from National Oil Company, which is GNPC. So what are the disbursements from the Petroleum Holding Fund? Take note here. An amount not exceeding 70% of the money in the fund is transferred to a consolidated fund. So it means after the Petroleum Holding Fund has received the money, 70% or an amount not more than 70% of it is transferred to a consolidated fund. That is, we call it the annual budget funding amount, ABF. ABFA, annual budget funding amount, to support the national budget. Are you getting it? So to support the national budget, the budget for the following year or whatever, 70% of monies from the Petroleum Holding Fund is transferred to the Consolidated Fund because you have to prepare a budget. for all public sector expenditures. Okay. 2, the remaining amount is transferred to Ghana Petroleum Fund. That is the Ghana Stabilization Fund and the Heritage Fund for savings and investment. So take note of this. When the Petroleum Holding Fund received the money, 70% is transferred to where? The Consolidated Fund to support national budget. Then the 30% left in the Petroleum Holding Fund is transferred to the Ghana Stabilization Fund and Heritage Fund for savings and what? Investment. And then 2, exceptional deductions approved by Parliament. If there are maybe any resolution passed by Parliament charged on the Petroleum Holding Fund, then it will be taken care of. So let's go and look at the 30% that was left in the Petroleum Holding Fund and transferred to the Ghana Stabilization Fund. Let's look at it. Now, the Stabilization Fund is a fund established to cushion the impact of a sustained public expenditure capacity during a period of an unanticipated petroleum revenue shortfall. Yes. So in years whereby there is a shortage of petroleum revenue shortfall, whereby we cannot transfer 70% into the consolidated fund to support the annual budget, then it means that there is a fund for us called the Ghana Stabilization Fund, which is established to cushion the impact of a sustained public expenditure capacity during a period of unanticipated petroleum revenue shortfall. It is not every year that government might make so much from petroleum revenue. And so that's why 70% is taken to the Consolidated Fund to support budgets, then 30% go to Stabilization Fund. Now, an approved percentage is transferred from the Petroleum Holding Fund to the Ghana Stabilization Fund. Yes. By this, we mean the remaining 30%, don't forget. Transfers could only be made from the Ghana Stabilization Fund only for the purpose of alleviating the shortfall in actual petroleum revenue. Yes. So transfer can only be made when there is shortfall in petroleum revenue. When there's not, it means it cannot be. Now let's look at it like this. Petroleum Holding Fund. Under it, we have 70% going to where? Consolidated Fund. The remaining 30% going to Stabilization and where? Heritage Fund. Is that okay? The Heritage Fund is created to provide an endowment to support future generations when petroleum resources have been depleted. Yes. So in the eyes of the law or parliamentarians, they try to create the Ghana Heritage Fund because they believe that a time will come when petroleum revenue may have been depleted because of complete, petroleum reserve are wasting assets, and wasting assets depletes. A time will come, there will be no more petroleum. So if there's no more petroleum, where are we going to get some money to support our budget or some money to even go into our Stabilization Fund? So the Heritage Fund seeks to support future generations like you and I when we have no resources again. What are the sources of money into the fund? Now, with the Ghana Heritage Fund, any excess petroleum revenue in a particular year are payable into this fund. Yes, any excess revenue. 2, an approved percentage is transferred from the Petroleum Holding Fund to this fund. Yes, the remaining 30%. 1 year after the depletion of the petroleum reserve, the amount in the Ghana Stabilization Fund and the Ghana Heritage Fund will be consolidated into Ghana Petroleum Welfare Fund, and the Ghana Stabilization Fund and Ghana Heritage Fund will cease to exist. Yes, are you getting this one? 1 year after the depletion of petroleum reserve. So it means a time may come, or a time that will come, that the amount in the Ghana Stabilization Fund and the Ghana Heritage Fund will be consolidated into a Ghana Petroleum Welfare Fund, and the Ghana Stabilization Fund and the Ghana Heritage Fund will cease to exist, meaning that a time will come that all our petroleum reserve will be depleted, and there will be nothing more left in the Ghana Heritage Fund and the Ghana Stabilization Fund. In this case, everything will be merged into what we call Ghana Petroleum Welfare Fund. And there will be nothing like Ghana Stabilization Fund or Ghana Heritage Fund. Okay. Let's look at Ghana Infrastructure Investment Fund. I put this one on the page some time ago. I'll look for it on the page, then I'll refer you and I'll show you where to read. So the Ghana Infrastructure Investment Fund, this is a recently proposed fund and is expected to be established by Ghana Infrastructure Investment Fund Act 2014. Now, the object is to mobilize and provide financial resources to manage, coordinate, and invest in a specified portfolio of infrastructure projects in Ghana for national development. What are the sources of revenue into this fund? An amount of money equivalent to 2.5% points of existing value added tax revenue, VAT. It means that 2.5% of VAT comes into the Ghana Infrastructure Investment Fund, and then an amount of money equivalent to 2.25% annual budget funding amount to be applied to amortization and direct infrastructure expenditure, repayment inflows of money on lent by the Ministry of Finance, then proceeds from disposal of state-owned equity investment, grants, donation, gift, and other voluntary contribution to the fund, fees or other monies. So you see, like I'm saying, all this, what I'm doing is to bring your mind or draw your attention that you could be asked to list sources of revenue into a particular fund. And you shouldn't deviate. You should get it right. All right. So what are the purpose or the functions of the Ghana Infrastructure Fund? The first purpose is undertaking investment for development of what? Infrastructure. Undertaking investment for development of infrastructure. You know infrastructure. Second point, the management and investment of initial and future contribution made to the fund. Just to manage an investment of initial and future contribution made to the fund. Then reinvesting into the fund to generate returns, the profits and proceeds from the investment of money of the fund. Then the next purpose is to promote in Ghanaian personnel the development of skills in infrastructure development, including project design, project management, financing and investment consistent with the object of the fund. So a question in the exam, the examiner may try to test you the purpose or the functions of the Ghana Infrastructure Investment Act, and should be able to tell them that leveraging the fund's capital by attracting investment through the domestic and international capital and financial market. Is that okay? All right. Zongo Development Fund. So the way you have to learn fund accounting is you look at the fund, its objectives and purpose, restriction on the fund, receipts into the fund, then expenditures charged against the fund. That's how to learn fund accounting. The Zongo Development Fund was established under the Zongo Development Fund Act 2017 Act 6964. The main object is to provide financial resources to develop and transform the social and economic condition of Zongo communities. That is Zongo Community Development. Zongo Development Fund Act 2017. So that's the main object of this fund. What are the sources of money into this fund? Money appropriated or approved by Parliament, grant, loans, other voluntary contribution. Then there are IGF, of course, other monies that may be lawfully payable to the fund. Now, what are the expenditures or the payments from this fund? Salaries of employees of the fund or other administrative expenses should not exceed 5% of total money approved by Parliament. Yes, this is a restriction. Application for funding. Money from the fund shall be applied to achieve the objective of the fund. Who qualify to apply for the fund? Now, a person is eligible to apply for funding from the fund if that person is a citizen of Ghana. They can ask you who qualify to apply for the Zongo Development Fund. he can ask you, these are the requirements. So take note. 1, if you are a citizen of Ghana, if you are a resident of a Zongo community, if it's a registered institution within a Zongo community or that works on a Zongo community matters. Are you getting it? Yes. So that is that for fund accounting. There's a soft question here. I've been talking for 1 hour 40 minutes now. I have about 20 minutes to make 2 hours. So let's look at this. Under the Petroleum Revenue Management Act 2011 Act 815, 3 funds are created, namely Petroleum Holding Fund, Stabilization Fund, Heritage Fund. Act 815 requires the petroleum revenue to be shared as follows: 70% to the annual budget funding amount, 21% to Stabilization Fund, 9% to the Heritage Fund. Assuming the budget for the government together with the actual petroleum revenue received for 2015, 2016, 2017 are as follows. Required. So the petroleum revenue, year 2015, 16, and 17. Budgets, we budgeted 30 million. Actual, we had 38 million. 38,000 million. 2016, 35,000 million, 32,000 million, 32,000 million, 36,000 million for 2017. So we have petroleum revenue, actuals, and then budget, and then what? Actual. Let's look at the requirement of the question. Calculate for all the relevant years the petroleum revenue to be transferred to the Consolidated Fund, Stabilization Fund, and the Heritage Fund. So the question has given us the preamble to the question, or the requirement of the question. Okay, I want you to think through this question very well. Next week, when we meet in class on the 2nd of July, we are going to use 10 minutes, 10-15 minutes to look at this question. Is that okay? We will look at this question when we meet next week. Okay, tomorrow, which is Monday is I think 28th. We'll be looking at procurement. It will be a live Zoom class. So thank you so much for having me for tonight. It's 12:42 a.m. Today is 26th. Oh, so today is Sunday. It means Monday is 27th. Today is Sunday. So we will meet again tomorrow, Monday, for a live Zoom discussion on public procurement. When we meet in class at the CBS MAKOLA on the 2nd of July, we take calculation or practical question. Thank you so much for listening. Until we meet again, it is bye.